Hi guys. Today we will analyze Kimberly-Clark stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The stock has been a bad performer in the overall market. Also recent evolutions are not positive. The short-term trend is negative, the long-term trend is negative. It is better to avoid buying stocks with negative trends. Strong support level is around $116. Next strong support level is around $110. Strong resistance level is around $136. Next resistance level is around $144. In the last month the stock has been trading between $125 and $144 range, which is wide. It is currently trading near the lows of this range. The stock has an average volume of 2.2 million. This is a good sign as it is always nice to have a liquid stock. The stock has been in a downward trend since August 2020. Be careful. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model, discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 1% per year, for last 5 years. We see that the average profit margin of the stock has been around 11% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 103% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for Kimberly-Clark Company: bad, average, and good. First scenario. Kimberly-Clark will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be low, 1%. Future profit margin would be low, 8%. Future free cash flow to net income rate would be low, 70%. In this case, the fair value of the stock today would be $101. Second scenario. Kimberly-Clark will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 2%. Future profit margin would be average, 8.5%. Future free cash flow to net income rate would be average, 75%. In this case, the fair value of the stock today would be $119. Third scenario. Kimberly-Clark will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 3%. Future profit margin would be high, 9%. Future free cash flow to net income rate would be high, 80%. In this case, the fair value of the stock today would be $140. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 5.18. Minimum rate of return. I will use 10%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For Kimberly-Clark, analysts forecast growth rate around 3% per year in next 5 years, and future P/E around 22. Again, I will use 3 different scenarios for Kimberly-Clark Company: bad, average, and good. First scenario. Kimberly-Clark will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be low, 1%. Future P/E would be low, 18. In this case, the fair value of the stock today would be $43. Second scenario. Kimberly-Clark will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 2%. Future PE would be average, 20. In this case, the fair value of the stock today would be $53. Third scenario. Kimberly-Clark will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 3%. Future PE would be high, 22. In this case, the fair value of the stock today would be $63. As you can see, today the stock is overvalued, $128, even if we expect the company's high performance in future. While Kimberly-Clark has a medium profitability rating, it has a high debt level. Also, the company is expected to show a very small growth in revenue, 3% per year in the next 5 years. Based on that, the stock looks overpriced at the moment. Keep in mind that the stock has been in a downward trend since August 2020, and it can go lower, before it recovers. The company is a dividend king. So, I may consider buying the stock for the dividend, when the stock drops below $100. Company strengths. Kimberly-Clark is an American multinational personal care corporation that produces mostly paper-based consumer products. The company manufactures sanitary paper products and surgical and medical instruments. Its leading brands include Huggies, Kleenex, Kotex, Depend, and Scott. Kimberly is geographically diversified with roughly half of its net sales coming from markets outside the U.S. It sells products in more than 175 countries. Its supply chain is diversified with manufacturing facilities in 33 countries. The company will benefit over time from favorable demographic trends and rising disposable incomes in emerging markets. The company is valued for its recession-resistant business model, reliable dividend, and strong balance sheet. Shareholders can benefit from the defensive nature of the stock. Kimberly-Clark is a dividend king. The company has raised its dividend for impressive 50 consecutive years. The stock currently has a 3.62% dividend yield. Kimberly's return on assets of 9% is amongst the best of the industry. It has a profit margin of 9%, this is comparable to the industry average. Risks. Kimberly continues to face challenges from higher input prices and modest sales growth at the company's KC professional and consumer tissue segments. Higher raw material costs have made their price hikes necessary, but management says that it is seeing signs of consumer resistance, such as shifting to private label products. Declining birth rates in developed countries could hurt demand for diapers, as seen in the decision to exit the diaper business in Europe. Kimberly-Clark, as a multinational corporation, faces substantial commodity and currency risk. The company's profitability is highly dependent on the prevailing cost of wood, pulp, and petroleum-based inputs, which tend to move inversely with the value of the dollar. While a supply and demand imbalance has kept a lid on promotions lately, competition will ultimately intensify, which could constrain Kimberly's volumes and profits. In terms of profitability and growth, Kimberly lags its peers and is thus trading at a discount. The dividend growth rate slowed down over the last decade, and will likely remain at a below-average level, unless the company returns to sustainable organic growth. The company has a high debt level. The company is not financially healthy enough, and could expect problems in meeting its short-term obligations. Kimberly-Clark is expected to show a very small growth in revenue. In the coming 5 years, the revenue will grow by 3 to 5% yearly. The earnings per share are expected to grow by 8% on average over the next 5 years. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.